We are already at monthly OPEX, and speaking of that, I'm pointing over here to the left side of the chart. Our current monthly all-time high settlement is still the one from November at 47.11 and change. So this week, are we going to try and go after that and try to settle monthly OPEX up here above 47.11? Or are we going to miss that boat for the second month in a row? We shall see. Here was what happened on Friday. After JP Morgan reported and kind of laid an egg and everything kind of gapped down open, we tried to make a little rally attempt. We set our initial balance range, but by the mid-afternoon, around 1:30 Eastern time, we began trading down to a new low of the day, finally settling down here at about 46.14 and change. Taking a look below that 46.18 level, that marks our 200 points off of the recent all-time high. Well, we reversed off of this and rallied back up to the initial bounce high, took a look above that, made a new high of the day up at 46.65, and then pulled back to close back inside the initial balance range. Now, as bullish as this rally looks, as we went into the close Friday, I have a feeling all it was short covering ahead of a long holiday weekend, with the European markets and Asian markets still trading, but the U.S. markets closed. So nobody wants to be caught, short into that. So that's kind of fed on that, I think. When we look at the roadmap, even though this candle does look pretty bullish, that does have like a nice long bottoming tail on the candle for the day. And once we regain the open, you can see we more than doubled up the day from there. However, we closed the week out below the 50-day, and above the 50-day, we have our 10 and 20-day simple moving averages pulling into a bear cross, sending out a sell signal. Also, when we look at the weekly closes here, here's the January week 1 close and the January week 2 close, a lower weekly close. And so this is two lower weekly closes in a row, because our final weekly close for December is our current weekly all-time closing high. And then the next thing you know, we're closing here, and then we're closing another week lower once again. So to my mind, this is all really bearish stuff. And as nice as this candle looks from Friday, unless we come out of the gate super strong, take out this 50-day simple moving average right away on Tuesday, or even gap up open above it, I think we're going to be in for best case scenario an inside day inside of Friday's range. More likely scenario is that we trade lower below Friday's low and at least fully backtest this January low that we set last Monday. Of course, if we wind up breaking to a new January low, it's not much further now to get to the 100-day simple moving average, and then we have this gap to fill just below that. Well, the problem with breaking down all the way to there now is this. Our bull fork will get destroyed. It will be broken. And if we break down below this, and especially close below this fork, we really don't have this nice sense of support below us anymore that has been floating us for the last almost 4 months. We're probably going to be working our way towards, well, first we'll take a stab at these two December lows. And if those don't hold, then we're going to take a shot at the 200-day simple moving average. And if the 200-day simple moving average doesn't hold, then we're going to take a shot at the low that launched this fork in the first place, the low set in Q4 of 2021, down at 42.78. And as we've discussed before, we have an unresolved lower October low in futures that has never been printed together in the light of day with the S&P 500, its parent. So that remains to be seen if that is unfinished business that this market wants to get done. We also, though, have unfinished business on the upside. We have the scene of the crime from the Fed minutes to take care of, to revisit and see what happens there. We also had an all-time high without making an all-time closing high. So a couple of pieces of unfinished business to the upside as well, which could suck a lot of people into a bullish sense of security, only to just get knocked back down by not making a new all-time high and then selling off with a vengeance and maybe making those moves that break the fork and so on and so forth. Okay, so even if we come out of the gate strong, even if we rally this week, remember that we could have a really nice juicy short entry here at the scene of the crime from the Fed minutes, and even just a little further above that, all the way up here at the all-time closing high. If we make a new all-time closing high, but don't make a new all-time high and then come in the next day and maybe sell off. That could be the ultimate entry, and all of this stuff that we might have missed in here that's been going on the last 2 weeks will seem like nothing compared to what we're going to do to the downside come the end of January and going into February. We'll see. Okay, so let's just take a look at the options real quick. Because we're already skipping a day this week of trading, with Monday being a holiday in the US, and the monthly January monthlies only will trade to the end of the day on Thursday, I just think that those are going to be in the land of decay too much. So unless we have, I'm pointing back to the roadmap over here, unless we have a really big move on Tuesday, I really want to stay out of those monthlies. I want to just go directly to the Friday end of the day options. So I'm going to go over the volume in those. On the puts, we had some volume standing out here at the 45, 70, and 75 puts. These would be around your $11 window entry if we open flat to slightly higher and then begin to sell off. I would rather try to get into these 4600s. 4600s would probably get us in closer to the $11 window if we were to come out of the gate on Tuesday and rally up to the 50-day and then just fail there and pull, and just pull back. Take a look at the volume and the price in the 4600s at that point. If we rally up above the 50-day, we really should be in calls. If you want to try calls right out of the gate, you might want to take a look right here at the 47.20 and 25s. They had some pretty good volume. You have some weird volume standing out at the 47.40s, and then finally you have some volume at the 47.50s. I don't want to get in a strike any higher than 47.50 because if we can get through the 10 and the 20-day, we got to get through these highs that were made in January week 2. Then we get back to the scene of the crime. At that point, you're just going to be starting to go into the money on those 47.50s. So you would take a move all the way up here to get those in the money. And that's what I think about when I get in an option. I don't want to just buy something that's so far out of the money that it's really not possible for us to reach it before the option expires. So that's something to think about. I really don't want to get any higher than the 47.50 strike. Okay, so I hope this video helped you out. I hope those entries into puts and calls made some sense. And I hope you have a great rest of your long weekend. As always, good luck and good trading. See you Tuesday.